Okay, so I'm going to make this as simple and as quick as possible. Robinhood IPO shares priced and are set to trade tomorrow morning, Thursday, which will be July 29th, 2021. Robinhood is expected to start trading in the public market under the ticker HOOD on Thursday with an initial price of $38, giving the company a valuation of $31.8 billion. The Wall Street Journal reported this is at the lower end of the expected $38 to $42 range the company expected. The investing app offers an easy way for investors to buy stocks, ETFs, and even cryptocurrency. Robinhood was a key component of the retail trading boom. Let's see. In an unusual move, the company is offering about a third of its shares to its own users. Okay, great. So we're going to talk about this later. Typically, companies do not offer shares to regular investors directly. Instead, someone who wants to buy a company stock on IPO day simply gets it on the public market as you would any stock. Robinhood had around 17.7 million users at the end of March, but since then has continued its growth spurt, reaching around 22.5 million, making it a serious player in the retail brokerage sector. The IPO's unique offering to its own customers may give it a competitive advantage. Users invested in the company may be more likely to remain brokerage customers. Regular investors can buy shares directly through the app at offering, which may mean fewer people to buy shares as trading begins. So observers will be watching to see how big the IPO pop is, if any. 2020's IPOs had some of the biggest pops seen in recent memory, while 2021 has seen less of this effect. Getting the kinks out. Though Robinhood is set to go public as a mature company, the startup mentality is barely in the rearview mirror. The accident-prone company settled with FINRA for $70 million, the biggest fine in the authorities' history right before announcing its plans to go public with a S1. Among a laundry list of issues were outages which occurred at times when trading volatility surged. This was unrelated to other outrages over the winter when the company was forced to pause trading of certain stocks like GameStop. In its preparation for IPO, the company has professionalized itself significantly from its Silicon Valley break things mentality that led to carve out its position so quickly, upending how brokerages make money. One of the platform's key innovations was not to charge fees for trading and instead allow users to make them for free. Instead, the company makes a large portion of its revenue from payment for order flow, in which another company pays Robinhood for the right to process its trades at a price at or better than the price of the exchanges. The company that executes Robinhood's trades gets to know about how its investors are buying and selling valuable information. Going forward, the public will have a better glimpse at what's going on in the company, which only recently disclosed its user numbers and amount of assets in its custody, as well as pending litigation and other issues and risks. So, first thing I should say is although I am a financial advisor, I should just clear that up right away. I am not right now giving any financial advice. But the question that I have to ask you right now is, do you plan on purchasing Robinhood's IPO? So the bottom line is, my problem with Robinhood, and this is actually my problem with a lot of the IPOs launched lately. What you need to understand is usually when a company is going public, usually they do venture capitalism in order to raise money. But recently, we've seen that when you have a lot of millennials who have a lot of money and not a lot of common sense, it's really easy to raise money just by throwing out the idea of having an IPO and then getting them to come into it. Now, usually you're supposed to raise money through venture capital. What we've seen recently is a lot of companies like Airbnb and Coinbase, for example, recently using their IPO in order to raise their money. Now, that brings me to talk about Coinbase. Coinbase has left a bad taste in a lot of people's mouths. I was fortunate. I saw the writing on the wall. I got out, and I didn't lose much. Not at all. I think I lost about $200 or $300, give or take. But the bottom line is, Coinbase. What happened with Coinbase was that they had given their own workers shares. They held the stock so that you couldn't buy it when it was released immediately. Then, when they finally let it float, its value had climbed considerably. And as soon as they had put it on the public and allowed the public to start buying it, the value rose, I think, to about the $400 range, if I'm not mistaken. And then it quickly dropped. Like, we'll look at the history of it right there. So the value rose pretty high. I think the high was, what's the high? The high, does this show the full high? It doesn't show it. The high was pretty high, but then their own people started selling their own shares. In my opinion, I call it a pump and dump, but technically and legally, chances are they would not consider it a pump and dump at the SEC. But my thing is, I have to wonder what's going to happen with Robinhood. The thing about Robinhood that bothers me is a lot of the people who, despise Robinhood specifically for pausing their trading when it came to the AMC apes when they went after GameStop. Which, by the way, let's just take a look at how Reddit is doing right now. Reddit's Naked Bread or Naked Brand, whatever it is, that is still at about 54 cents, up from 6 cents per share. AMC is down to 38.89, down from 72.62. GameStop was at 483. It dipped below 300. It never fully returned. So I feel sorry for the people who kept putting money in when GameStop was above $300, because a lot of people lost their shirts, and they're never going to tell the truth about it. They're never going to tell you they lost their shirt, because I'm pretty sure they'd feel stupid. What is it? Bed Bath & Beyond, $29. Bed Bath & Beyond is technically, it's actually a decent stock because there is a company behind it. Bed Bath & Beyond stores are around here. I would say the same thing about AMC. But when you look at Coinbase, Coinbase was it was a big miss. Coinbase was terrible. And the sad thing is, I really expected it to be better, but I didn't realize that they had a scam going on behind the scenes. So that spilt milk under the bridge. Hood just might end up being the exact same thing. The way I see it is the day traders are going to get in on this as soon as they can. They're going to buy it nice and early. I think the price is going to go climbing, and then they're going to sell that shit by the end of the day. This is just my belief. My belief is what's going to happen is the day traders are going to buy into the early morning opening frenzy, and I believe that by the end of the day, it might end up trading lower than it started, and it's starting at $38. Now, I don't know if the same thing will happen with Coinbase, if they'll hold it and they'll make you wait to buy it in, because, see, here's the thing. When the stock market opened at 9:30 in the morning, I was expecting to be able to buy Coinbase right at the beginning. They didn't allow you to open it up and buy in until around 11 or 12 o'clock. That cost me considerable money because I could have bought it at the dirt low, but they held it. If Robinhood does the same shit, if I were you, I'd be very careful, steer clear. I know I will. Because the thing about it is that, in my opinion, that was a fucking pump and dump. As I'm just going to call it what I see it. I think that shit was a fucking pump and dump. And I really think there's a possibility the same thing might happen with Robinhood. Because when you really think about it, who are they really attracting? They're attracting day traders. They're attracting meme traders. Those are the most fucking dangerous, volatile morons on the internet. These guys are dangerous because they're so stupid. And they're easy to manipulate. Day traders, meme traders, and then you have people who just hear the words IPO and they're like, oh, I got to get in on that. Some of the IPOs, like for example, I was talking about Airbnb, and I talked about this in another video. Airbnb was never profitable. There is no profit. It wasn't profitable. They went to a 52-week high of $219. And quickly dropped down to $143. Quickly. And I believe, if I'm not mistaken, obviously coronavirus had a lot to do with that, because how the fuck could you be profitable if nobody's traveling? How could you be profitable if countries have their borders blocked and you can't even go into the country or you can't travel across states in some cases. It's like I knew Airbnb was gonna collapse. I knew that. That's why it was like I tried warning people about that. I said, listen, we have no idea what's ultimately gonna happen in the stock market, but the one thing we can kind of anticipate is that there are some companies that have proven themselves to be extraordinarily strong and resilient. We've seen 3 or 4 stock market dips this year. Who's held out the best? Microsoft, the big tech giants, Microsoft, Apple, Nvidia. Nvidia's stock split has finally gone through. I'm glad about that. I'm up in Nvidia very well. I'll be up even more when the RTX 4000 series of GPUs comes out. Who else? Who else is dividend payer? Well, obviously, oil companies and gas companies in general have been up. I said in a video, I am an oil man. That's where you make some decent money in the stock market. But the problem was you had to buy in the very beginning. Now, for people who may be trying to buy oil stocks now, I must say that if you're buying in now, the best thing you can do is go after the ones that pay dividends, specifically the big gas companies, Sunoco, Exxon, BP, Chevron. I think it makes more sense to go to them because the thing about it is they have a network of gas stations. They're going to be around for some time. It's going to be a while before electric vehicles starts to puncture their profits. But you got to remember, right now, gas is fucking $4 a gallon in some places. In some places it's $5 a gallon. But around here it's about $3.19 a gallon for premium unleaded. So I will say this, I do plan on going electric soon. I would like to buy the Charger electric Dodge EV. I do intend on pushing my mother towards the Cadillac Lyric. So I've been testing a lot of EVs. I think that's definitely going to be my next car. My house right here has the 240 volt, 240 volt charger. So if I want to, I can charge an EV at step 2 speeds. So I'm kind of excited. My other house has the conversion already done for 240 volts, but the other house does not have an electric charger for electric vehicle. So I'd have to plug one in there. But for the most part, I'm very, very excited. But to tell you the truth, even with all of this stuff, even with all these stocks, all these numbers, to tell you the God's honest truth, the best possible commodity you could be buying right now is a house. Corporations are still buying up houses. People who are in the housing market right now, they're seeing their bids being outbid every single time they bid. A lot of these corporations, they'll buy a piece of shit house just so they can tear it down, keep the land, and then rebuild a new house on top of it. You got to remember, they have long-term goals. They have money that you can't imagine. They have millions of dollars in cash in many cases. And if they don't have the money, they can get the money from either another country or a conglomerate that they have access to. So if you own a house right now, you're sitting pretty. If you own more than one house right now, you're sitting very pretty. My goal was to buy a third house. I'm looking still for one because I want to get it at $300,000 or less at a 3% fixed interest rate. And I'll probably do that for like a 15-year mortgage and then pay it off as quickly as possible. But right now, it's very hard to find anything. So I, like a lot of other people who don't have houses, are we're very we're distraught. We're a little upset because the thing about it is nobody expected the corporations, the conglomerates, to swoop in like they did and start purchasing up these houses while they're getting these less than 3% interest rates. Nobody expected that. They are never going to sell those houses. They're going to keep those shits indefinitely and they'll rent them out. Either they'll do that Airbnb nonsense or they'll rent them on some other rental like eBay or something like that. Because there's so many rentals right now. I'm pretty sure Amazon has their own. I'm pretty sure Google has one. Because I know when you go on Google Maps, it actually shows you houses for rent. It shows you condos for rent. So, a lot of us are very dismayed about the fact that the housing market is a mess right now. But that's basically what I wanted to say about Robinhood. That's where I wanted to get with Robinhood. I'm pretty sure most of the the influencers on YouTube are going to be talking about Robinhood. They're going to say the same shit I did. They're going to say, yeah, it looks a little sketchy. I can't tell you to buy it. I can't tell you not to buy it. buy at your own risk. They're all going to say the same bullshit because that's all you're really allowed to say. Otherwise, somebody might accuse you of making what is it called, false representation or something. The last thing I'm going to do is just talk about this thing right here that I saw. Should you push for a higher credit limit if yours is already enough? And this is by Maury Backman, and this was released yesterday. So the question is pretty simple. It says, should you ask for a higher credit limit if you already have enough credit? I don't really have to read this. I will give you the link. But basically, let's go over the broad strokes. It says a higher limit could mean a higher credit score. Here's the thing. What you have to think of this as is the banks are playing a game. They are lending you money, but they want to see that you're not using it. Now, some people have hassled me when I tell them that, listen, every single night I pay off my credit card bills. Every single night. Now, they say, oh, you don't have to do that. You can wait till the end of the month. Here's the thing, though. When you wait till the end of the month, the bank takes about a week, give or take, to see that you have a balance on your credit card. So what they do is they start recognizing it as a revolving balance. So if let's say you borrow $1,000 and you pay it off at the end of every single month, the bank notices that you're constantly using $1,000. Now here's the thing. The question that they would ask, why is this person using $1,000 constantly? Why are they constantly running this balance? The logical answer is that they are supplementing their income using their credit card. So obviously, you're not making enough money to get you through the month. So what you're doing is buying on your credit card and then paying it off. Now, that tells them that you may or may not be a credit risk, but they're probably edging towards you. You're probably a credit risk because why the fuck do you need to keep borrowing this money? It's like if why? Just that's the question. Why do you need this money? Now, what I do is no matter what I buy, I always have the cash to pay it off. And as soon as I see it applied to the credit card account on my app, I pay it right off. The bank never has a chance to see that I'm carrying a revolving balance. The bank never has a chance to charge me interest. I haven't paid interest on credit cards in years. I think it's been maybe 7 years or something since I paid interest on a credit card. Because I never buy what I can't afford to buy in cash, and then I pay it off immediately, netting the rewards and the frequent flyer points. Because next year I do plan on going on a great vacation. I'm thinking Dubai and probably Maldives again. And I'm gonna have my nice 4K iPhone with me so I can take a nice vacation video like you see on Facebook. And it's gonna be lovely. I'm sure my girlfriend's gonna love it. I'm gonna have her butt naked most of the time because you know how it is in Maldives. Like you have the slide, what is it called? The water slides on the side of your. Let's take a photo. Let's take a picture at Maldives. Let's Maldives resorts. So my chick is gonna be butt naked, and we're gonna have what is this called? We're gonna have a nice little, nothing too expensive. But we're going to get something just like this. I want to have a water slide just so I can slide on it. Yeah, I like water slides. And basically, you can rent these places. These things are like $100 a day. And for me, shit, that's nothing. $100, $110, $150. Fuck it. As long as it's under $200. Because if you want to stay there a week, you don't want to have to spend $1,000 just to stay in the place. Now, granted, I could afford it. But my thing is, I want to have a water slide. I'm going to have my chick there. She's going to be butt naked. And we're going to be alone there on this water, just like I was in Seychelles. And the chick's going to be butt naked and no top. And there's going to be nobody around to give you any problem whatsoever. It's going to be fabulous. I'm going to take video of the whole thing. By the way, if you didn't see my video of Seychelles, I made a video called The Real Seychelles. That's another dream vacation that most of you motherfuckers never going to go on because half of you don't have a passport and the other half of you may have died of coronavirus. So, bottom line is, I have that video, so if you can get a chance, you can always take a look at it. But it's going to be awesome. Imagine going to a place where the water is so great, you don't even need a pool because the backyard is a pool. That's what I'm talking about. So, that's my plans. But, as far as your credit goes, what they're trying to do is they want you to have what's called a high credit availability. So that means that you have a lot of access to credit, but they want to show that you're using very little credit. So that means that your credit usury is very low. Usually they want you to have less than 5% in use at any given time. Some credit scorers go for less than 3%. So if you have $50,000 worth of credit and you're using less than 10% of it, that's obviously high. But if you're using less than 5% of it, that's a little bit better. But if you're using less than 3% of it, that's even better. Because they're like, wait a minute, this person uses his card, he purchases airline tickets, he purchases hotel stays, but he does not use his card to supplement his income. That is the key word that you have to remember. The banks want to make sure that your income is enough. They want to make sure that you're not trying to supplement your income. That's the key word. That's what I was taught in the underwriting process. That's what I was taught, so I'm trying to share that with you. So I got from Capital One, they offered to raise my credit card limit. I didn't need my credit card limit raised, but they asked me if I wanted a credit limit raised. So I said yes. So they asked you, okay, how much do you make per year? So I input my annual income, and they were like, great news, right away. They do the shit in like 2 minutes flat. They're like, great news, you just got a credit limit increase. Apple Card has not asked me for an increase. My Capital One Visa Venture Card did. Apple Card usually asks you to apply through the app. But Apple Card doesn't want to give you too much credit. So if they see that you're the type of person constantly buying MacBooks and you're spending a lot of money, yeah, they'll give you the credit increase. If they see you're a person buying Mac Pros and DJ equipment and shit, yeah, they'll give you the credit increase. Me personally, I only use my Apple Card really for two things. Number one, I pay for extended car insurance so that this way the credit card gets a workout. And it's important to give the credit cards a workout because if you leave your credit cards unused for too long, the banks may cancel them. Like, for instance, I had a Home Depot card and I didn't use it for a while. The bank canceled that. I think I had a Walmart card. The bank canceled that one because I hadn't used it in a while because I kept going to my Capital One Venture card. Most store cards will cancel if you don't use them regularly. So if you're a contractor, it may make sense for you to have a Home Depot card. If you're a Walmart shopper who shops and gets everything from Walmart, and let me say this, I went to a new store, Stu Leonard's, today. Stu Leonard's, great store, farm fresh quality. I think I'm going to be going to Walmart a little bit less from now on. Because Walmart is basically like fat and sugar, and that's about it. It's like fat, sugar, and processed foods and shit. So I kind of like the farm fresh quality of Uncle Giuseppe's and Stu Leonard's here in New York City and Long Island. Well, actually, it's mostly Long Island because New York City is not big enough. New York City has those Whole Foods. Whole Foods is shit. I fucking hate Whole Foods. Their food looks stupid. The people that shop there look like zombies. They look like walking sticks. They all look unhealthy. They think they're healthy, but they look unhealthy. I don't know what it is about that place. I don't like it. It looks sterile. It looks like some shit from a Resident Evil movie. I'm not happy about Whole Foods. Stu Leonard's, Trader Joe's, and Uncle Giuseppe's. Those are some great places to shop. So, basically, I think I said everything I needed to say. I'm going to leave the link to this in case you want to read it, because I know some of you are trying to fix your credit. And I'll also leave the link to this Robinhood IPO story, so that if you want to read it, you can read it. But that's all I basically had to say. Everything else is doing pretty well. My stocks are doing just fine. I have 10 years until retirement. I'm looking forward to it. I want to get the fuck out of this system, and I want to also get out of this country for a while. I think I might leave the country for maybe 3 or 4 years after I retire. Maybe. I'm going to live on a nice tropical country with nice, young, barefoot, impoverished females, and it's going to be great. It's going to be fabulous. Definitely impoverished. They got to be impoverished, because I don't want to have to deal with this liberal feminism nonsense that has destroyed America and has destroyed all of our relationships here. So I'm going to go to a nice country where the girls have to milk cows and have to get their eggs from chickens, and they're all barefoot, and they're running around in skirts made from pine cones and shit. That is real living. So the next time you catch me, I'm going to do the vacation video. I'm going to be in Dubai and then Maldives. It's going to be fabulous. But that's going to be a while from now because I can't travel right now. I'm looking at summer 2022. It's going to be fabulous. I can't wait. I hope if you're hearing the sound of my voice, I hope you're like, shared, and subscribed, because I want you to join me for that. In the meantime, you can check out my video, The Real Seychelles, The Real Dubai, and The Real Thailand, just in case you want to check any of those out. Or The Real South Korea, because I did one called The Real Seoul, South Korea. I like vacations. I gotta get the fuck out of here before I lose my mind. So anyway, thank you for listening. In case you plan on buying Robinhood tomorrow, good luck. I think you're about to get fucked out of your money, but good luck. And that's not advice. I'm just saying that's what I think, but it's an opinion. But yeah, good luck just in case you plan on doing it. And that's all.